Okay, hello and welcome everyone to this session. Now, this is our first class of the qualification, which is called Certia, which stands for Certificate in International Auditing. This is our first class of this qualification, which is in short called Certia. That stands for Certificate in International Auditing. Okay. I will cover this qualification with you. However, in the first class, I will tell you all the basics regarding this qualification, many questions which will be in your mind as well. Okay. This qualification will be covered, the tuition will be covered by me. My name is Ahmed Shafi. I am from Pakistan. Okay. And I have experience of approximately 15 years teaching different professional qualifications. That this auditing course I've been teaching since the last 15 years in different professional qualifications like ACCA, like ICAP, like ICAEW. In these professional qualifications, I have been teaching auditing since the last 15 years, and numerous of my students have secured nationwide and worldwide positions in audit exam multiple times. So rest assured, you are in safe hands at the moment as far as this Certia qualification is concerned, Certificate in International Auditing. I'm the tutor, Ahmed Shafi, 15 years teaching experience in auditing in different qualifications like ACCA, like ICAP, like ICAW. Numerous of my students, if you are on social media, we do market it as well, have secured nationwide, worldwide positions in audit exam in all these qualifications. Okay. Now, many people ask me who this qualification is for whom this qualification is, this Certia. Now, to do this qualification Certia, firstly, remember, there is no prior qualification required. That means if you are doing any professional qualification like ACCA, ICAW, CIMA, you can do it. If you're not doing any professional qualification, you can still do it. If you're doing bachelor's, you can do it. If you're in master's, you can do it. If you're in OA levels, you can do it. Okay, you're in high school, you can do it. Okay, no prior qualification requirement. Okay. This qualification creates a value in your profile. Qualification creates a value in your profile. Like, let's suppose you write in your profile that you have done ACCA. You write in your profile you have done ICAW. Similarly, you can write in your profile that you have done Certia. The exams are conducted by ACCA body. The exams are conducted by ACCA body. Okay. And they conduct this exam. And once you're able to clear this exam, you get this qualification, and then you can add in your profile, add in your CV that you have done Certia as well. Obviously, many people say that the CV should be supportive. CV should be heavy. Okay, this guy has done this, this guy has done that. So this is a value addition in your CV that once you do this qualification, apart from many other qualifications that you have done, you can also claim that you have done Certia. How to prepare. How to prepare. Okay. Now we will provide you 60 hours approximate, right, of video lectures. We will provide you 60 hours of video lectures, okay? And ideally, not force, ideally you should complete these lectures in 2 to 3 months. We will provide you 60 hours of video lectures, and ideally you should complete these lectures in 2 to 3 months. These video lectures you will complete in 2 to 3 months. Together with lectures, we will provide you all study material, study notes. We will provide you tutor support that you have. If you have any queries during the lectures, you can always contact me. Now, once you see these 60 hours of video lectures in 2 to 3 months with study notes and obviously tutor support, once you do watch these lectures in 2 to 3 months, you are prepared for Certia. You need to go to the ACCA website, the Association of Certified Chartered Accountants website, and you need to book an exam of Certia. You need to go on the ACCA website, book the exam of Certia. It's an online exam. It's an online exam, and you can book it and give it anytime. Book it and give it anytime. The exam will consist of 30 MCQs, which you have to answer. It will be a 1-hour exam and 50% pass marks. Okay. If you achieve 50%, you are pass in this exam and you can get the qualification certificate. Okay, so preparation will be through my video lectures. I will provide you video lectures. It's approximately of 60 hours. Ideal time period, even you can take 1 year. I have no problem. But ideal time period is 2 to 3 months. You complete the video lectures, study notes, tutor support. Go to the ACCA website, book the exam. ACCA conducts this exam. Okay, online exam. You can give it anytime from your home. Okay, anytime from your home. 30 MCQs. 1-hour exam, 50% pass mark, boom, you are done with Certia. Okay, if you need to copy, please copy this. Okay. Now, let me tell you. The course outline. Let me tell you the course outline for Certia. Now, many people will see this course outline here in my class. And many people have already researched about the course outline through website. So they usually ask one question from me. Okay. They usually ask one question from me. Students ask from me, sir, when I checked the course outline looked similar to ACCA F8 AA Audit and Assurance exam. This is a very common question that when I saw the course outline, I saw it very similar to ACCA F8 Audit and Assurance AA exam. Now I reply them, this is because you are an ACCA student. If you are an ACCA student, you are finding this course outline same as ACCA F8 exam. Okay. Now, had you been an ICAEW student, okay, there is an exam of audit in ICAEW. Go and check the ICAEW audit course outline. Same as ACCA, same as Certia. So this looks to be entirely an irrelevant question, because when you are doing audit exam in ICAEW, obviously all standards will be covered. So the course outline will be all audit standards. When you are doing ACCA F8 audit, all auditing standards have to be covered. So the course outline will include all auditing standards. Now you won't say it's similar to ICAEW. Obviously ICAEW audit also has all auditing standards. ACCA F8 also has all auditing standards. Similarly, Certia also has all auditing standards. So no matter whatever qualification you are from, if you are studying audit in that qualification, what is the purpose of audit exam? Teaching you all the audit standards. So if any audit exam wants to teach you audit standards, then Certia also wants to teach you audit standards. So the course outline of every audit exam, no matter ACCA, no matter ICAEW, no matter any other qualification, no matter Certia, if the qualification wants to teach you all audit standards, the course outline will involve all audit standards and you will find the course outline same. Okay. So if you don't want to prepare, okay, and you say, okay, I will just prepare ACCA F8 or ICAEW audit and jump in the exam, it's your choice. No problems. Okay. And if you want to study it, revise it and study, it's again your choice. Since every qualifications audit portion has to cover auditing standards, you will find the course outline same. Now, what is the course outline of Certia? The course will be divided into 5 sections. Please copy it and I will explain. Section A, Section B, Section C, Section D, and Section E. The course will be divided into 5 sections. What is in that 5 sections? Please note, and then I will discuss. Okay, so I have divided the syllabus in 5 sections. Okay, the first section is section A having 5 chapters. The first section is section A having 5 chapters. Audit and other assurance engagements, in which you will be guided what is audit and what are other engagements. Audit and other engagements. What is audit and other engagements? Regulation, what are the rules, regulations governing audit? Corporate governance, ethics, and internal audit. What is external audit and internal audit? Section B has 3 chapters, as you can see. Risk, what are the risks during audit? How to plan and document audit? What is audit evidence? Section C, you can see, has 2 chapters. Internal controls, what are the controls in the company and how to test them. Section D has 7 chapters. 11 to 17, all are related to substantive procedures. But substantive procedures are on different items. Like maybe one chapter will cover substantive procedures on assets, one will on liabilities. You don't know what is substantive procedures, therefore I'm not going in detail. And section E has 2 chapters, reports and going concern and subsequent events. This is your course outline. Now, once we will cover this course in 60 hours of videos, you will be in a position to go for the exam. You have to attempt just 30 MCQs. You will get all concepts with me and a conduct exam. Okay. Okay, so let's start our studies with section A, chapter number 1, audit and other assurance engagements. Okay, let's start our studies with section A, chapter number 1, audit and other assurance engagements. Okay, so starting our studies from section A, chapter number 1, audit and other assurance engagements. Okay. Now, in this chapter, we will introduce with basically what is audit. In this chapter, we will introduce with all of you what is audit. Okay. Now, consider a case that, for example, I am one individual. Okay. This is me. Okay. And this is my friend. Consider a scenario that this is me and this is my friend. Okay. One day, my friend comes to me and tells me that he has a business idea and he wants me to give him money because he doesn't have money. I listened to his business idea and I found the business idea to be very good. He said, okay, I have this business idea, give me money. You are the investor and I will run the operations, okay? And at your end, whatever the profit will be, we will share 50-50. I trusted him, I gave him my money, okay, do the business, run it, and in the end, whatever profits are there, we will share 50-50. Now, at year end, my friend comes and says, congratulations, we got USD 10,000 profit, $10,000 profit this year. And by distribution, $5,000 mine and $5,000 yours. Okay, he said $5,000 mine and $5,000 yours. I took $5,000 from him and he went away. But remember, after he left, a thought came in my mind that my friend took money from me. And throughout the year, he was the sole user of that money. He ran the operations. He was everywhere in the company. I didn't go even one time in that company. And at year end, he says that $10,000 is the profit. How should I believe? Maybe he has earned more profit and he's not disclosing it to me. So what should I do? After repeated thoughts, I communicated this concern to my friend. That, listen, our friendship is on its own place, but business and friendship are different. I gave you my money. You use that money as per your own convenience. Okay, whatever you wanted to do, you did that. Okay. And when year end came, you just came to me and gave me $10,000 statement that this is the profit and 5,000 yours, 5,000. I trust you, but I'm just concerned that you were the sole owner throughout. How can I believe that $10,000 is the profit? So my friend told me that, okay, you can come to the company and ask any employee that whether the profit is $10,000 or not, they will confirm. Would you trust on the employee word? No, because employees are his. He was the boss in front of them. How can they again go against him? He said, okay, if you don't trust an employee, ask my brother. He will tell you that we earned 10,000 profit or not. He will confirm. Will you trust his brother? No, that's his brother. You will favor him. When will your concern be resolved? When will you be confirmed that $10,000 is the profit? You will be sure that profit is 10,000 when and independent, not biased, honest, and professionally qualified person. He comes, reviews all the entities, accounts and details, and this independent, honest, and professionally qualified person tells you that, okay, mister, the profit is indeed 10,000. Then your confidence will be enhanced, then you will be confirmed, then you will trust. This person having all these three traits is called auditor, and the activity he is going to conduct in the entity is called audit. Now, I've still not told you what is audit. I've just given you a background that me and my friend started one business. I invested, he ran the company. I didn't even went in the company a single time. But at year end, 10,000 was the profit. And he said 5,000 mine, 5,000 yours. So I was not trusting him that 10,000 is the profit because I was not there. He said, okay, you can ask my employee, you can ask my brother. I said, no, I won't trust him. When will my trust be increased that the profit was indeed 10,000? When an independent, honest, professionally qualified person comes and he says the profit is indeed 10,000, then my trust will increase. That person is called auditor and the activities conducts is audit. Now you don't need to copy this stuff, but what you need to copy is the further thing which I'm telling you. That's exactly the case in company. That's exactly the case in company, that who are the investors or owners of the company? Shareholders. Who are the investors or shareholders, investors of the company? Shareholders. They invest cash. They invest cash. But they don't run the company. They don't get involved in day-to-day affairs. What do? They invest cash and they appoint directors, pay them heavy salaries, and directors basically run the business. Okay, what happens? Directors run the business. Okay, now what happens? At year end, exactly the same situation between me and my friend gets created. At year end, directors prepare financial statements. Now, when I talk about financial statements, it means 5 things: P&L, balance sheet, statement of changes in equity, cash flow statements, and notes to the accounts, disclosures. So at year end, shareholders are the owners. They have invested cash, but they don't run the company. They appoint directors to run the business. At year end, directors prepare financial statements. Now, financial statements include 5 things: P&L, balance sheet, statement of change in equity, cash flow, and notes to the accounts. And they prepare financial statements and submit to shareholders that this is the P&L, this is the balance sheet, this is the profit. Now the P&L states, let's suppose the profit is 50,000 profit. Shareholders feel the same thing which I felt with my friend. Now shareholders will feel that we were the owners, we invested cash. Throughout the year, we were not in the company. Our cash was used by directors as they wished. Now at year end, they are saying 50,000 is the profit. How should I believe them? They ask the directors that how shall we believe you that profit is indeed 50,000? The directors say you can ask any employee. You won't trust any employee because directors are the bosses. Ask my brother. Director says you won't trust your brother. When will you trust that the profit is indeed 50,000? When an independent, when an honest, when a professionally qualified person, he comes, reviews all the financial statements and says, yes, the profit is indeed 50,000. Then your trust will be increased because an independent, not biased person, an honest person, a professionally qualified person has said this. This person having these 3 traits is called auditor, and the activity he's going to conduct is called audit. Right? Now you should copy this, and I'm writing the definition of background of audit. Please note it as well. Okay, so exactly this is what I've written with you, that the real owners of the company are shareholders as they have invested cash, right? But business is run by directors. Shareholders have invested cash, but business is run by directors who are appointed by shareholders who run business. At year end, directors prepare financial statements. Remember, financial statements include 5 things: P&L, balance sheet, source sheet, cash flow, and notes, and submit to shareholders. And shareholders are going to doubt these financial statements. Their doubt is resolved when an independent, honest, professionally qualified person comes, checks and confirms the directors are right. That person is called auditor, and the activity he conducts is audit. Okay, now. Obviously, I have to take care of MCQs as well. Therefore, I will cover every single and small issue as well. Now, we said shareholders are the owners and they have invested cash. Okay, but business is run by directors. This happens in every organization, that shareholders invest money, but they don't run the business. Business is run by directors. Shareholders appoint directors to run the business. Okay, so there is a relation between shareholders and directors. One relation is called agency relation, and one is called stewardship relation. Okay, agency relation states that directors are agents of shareholders. Agency relation states directors are agents of shareholders. And stewardship relation states that directors are caretakers of shareholders' investments. Now, agent is any person who has the authority to act on your behalf. So directors are agents for shareholders. They can act on directors can act on shareholders' behalf. They're agents of shareholders, and they are stewards as well. Caretakers of shareholders' investment. They should not waste their money or waste their assets. They should take care of these investments. Okay, so shareholders are the owners and they invested cash. Directors run the business. They have an agency and stewardship relation. At year end, directors will prepare financial statements, submit to shareholders. Shareholders will always doubt these financial statements. The doubt will be removed when an independent, honest, professionally qualified person comes, checks and confirms that directors are right. That person is called auditor. Activity conducts is audit. Okay. Now remember, audit is of 2 types. One is called statutory audit, and one is called non-statutory audit. Okay, audit is of 2 types. One is called statutory audit, one is called non-statutory audit. Statutory audit is the one which is required by law or statute. Non-statutory audit is also called voluntary audit. It is not required by. Okay. Audit is of 2 types, statutory and non-statutory. Statutory audit is the one required by law, and non-statutory is voluntary, not required by law. And every listed company is required to have an audit. Statutes required by law, but there are many entities which are not required by law to have an audit, like charities, like SMEs, small and medium-sized entities. We will cover these in future chapters, but they are not required by statute to have an audit. But still, they conduct their audit voluntarily. That's why it's called voluntary audit. Okay, audit is of 2 types. Statutory, non-statutory. Statutory audit is the one required by statute or law. Non-statutory, voluntary, not required by law. Now, one thing, if a company is required by law to have an audit, they will have an audit. But one company which is not required by law to have an audit, they voluntarily have audit. So why? Why they will have a voluntary audit? In many countries, charities are audit exempt. They're not required by law to have an audit, but still charities have an audit, conduct an audit voluntarily. Why? Because there are some advantages of non-statutory or voluntary audit. Number one advantage is claimed as means of settling accounts between partners. Second, tax authorities issue. Third, bank loan help. Fourth, public image. I will explain you, wait. I said there are many companies who are not required by law to have an audit, still they have an audit. Why? Why they were going to have an audit why they're going to spend money when it's exempt? Because it has some advantages. It's a means of settling accounts between partners. Now, in my college, we are 4 partners and we are an SME. So by law, we are not required to have an audit, but still we have an audit voluntarily. Why? We have an advantage. No one has time from the classes, all 4 partners, no one has time to check accounts. Our accountant randomly prepares. So obviously someone might think that accountant is biased towards one partner. So when audit firm does an audit, it's a means of settling accounts between all of us. We all trust them. Then our accountant prepares tax records. That is the tax we have to pay. Tax authorities don't trust our accountant. They say that they have definitely calculated a reduced tax. But when they see stamp of an audit firm, tax authorities accept those audited accounts. We need a loan. Bank asks financial statement from us. Our accountant prepares financial statements and gives to the bank. Bank rejects it. But when an audit firm has audited our financial statements, bank gives loan. Charities are audit exempt. But if a charity has audit, public image increases that they are keeping record of every single penny. These are the advantages. But obviously, there are some disadvantages as well of non-statutory audit, in the sense it is time consuming and costly. Okay, non-statutory audit, you are not required, you still have an audit, your time wasted and you incurred cost as well. Okay, please copy this. Okay, so up till now, I have told you one thing, background of audit, forget about the course outline and stuff that you will remember for the rest of your course. Now, from chapter number 1, background of audit, that the owners of the company are shareholders. They have invested money, but the business is run by directors. They run the business. At year end, directors prepare financial statements, which is 5 things, submit to shareholders, shareholders doubt them. Their doubt is overcome when an independent, honest, professionally qualified person comes and gives them thumbs up that this is fine, then their trust is increased. That person is called auditor. Activity conducts is called audit. Now, since shareholders are the owners, but they have invested money and they appoint directors, so there's a relation called agency. They can act on their behalf and sue a chief caretaker. Okay, and then we talk about that audit is of 2 types: statutory, non-statutory. Statutory is required by law. Non-statutory is not required by law. Many companies, there is no advantage, disadvantage in the syllabus of statutory audit. That's why I've not written it for you. Non-statutory audit, obviously, one is not required by law to have an audit. Still, they have it. They get some advantages. Partners, settling accounts, taxation authorities accept them, bank loan help, public image increases, but disadvantage is time-consuming and costly. Now, one important thing, this is very important, and this may change your image as well, that no matter how much money you pay to auditor, you have paid millions, you have paid billions, no matter how much money you pay to auditor, always remember, auditor will never give absolute assurance or guarantee that everything is fine. He will only give reasonable assurance, 80, 85%, 75%. That's quite strange. People say, I have given so much money to him. How he doesn't give absolute assurance or guarantee? Why he only gives reasonable assurance? I'm paying you so much money. Why is giving 70, 75%, not 100% absolute assurance or guarantee? Why auditor does not give absolute assurance or guarantee? Why he gives reasonable assurance? Due to some inherent limitations of audit. There are some drawbacks, limitations of audit. Human error. Now see, there are students who solve an exam question and they miss zeros. 6 or 7 zeros, they miss it. Human error. Auditors are also humans. So much long financial statements, billions and billions of dollars. They might miss something. How can they take guarantee? They will be presented in court of law if they take a guarantee. So they say that it's reasonable, not absolute. Because we are humans, we can make it. Second, audit is never done on population basis. It's only done on sample basis. Like for example, an auditor has to audit about sales. There are thousands of invoices. He won't ever see all 1,000. 5, 10, 20. Audit is never done on population basis, always on sample basis. If you have seen just a sample, how can you take guarantee? Second reason, why he doesn't give absolute assurance or guarantee. Third, financial statements are prepared on estimates, which can be incorrect. How do you compute depreciation? Cost less scrap value over estimated life. This estimated life is just an estimate, it can change. So if auditor says, okay, I'm taking guarantee, and the estimated life changes, everyone will present him in court of law. Fourth, management are sometimes involved in fraud. Always remember, management themselves do fraud. If management do fraud, they make sure they don't leave a trace of it. So if management is involved in fraud, it's difficult to find it. An auditor says, I'm taking guarantee, there is nothing. He can't take guarantee. So auditor will always remember, no matter how much money you pay, how much qualified person, how much qualified firm you are, never ever they give absolute assurance or guarantee. They only give reasonable assurance, 80, 85%, because there are some limitations. They're humans, they can make error. They don't take guarantee. They don't check the entire population, they just take the sample. How can they give a guarantee on sample? Financial statements are prepared on estimates. No one can guarantee about estimates. And if management are involved in fraud, it's very difficult to guarantee. How can auditor take guarantee? But in the red pen I've written, there are a group of people who perceive that auditor gives absolute assurance or guarantee, whereas in reality, it's not the case. This difference between public perception and reality is called expectation gap. Like I am expecting before studying this paper that he will give absolute assurance or guarantee, whereas in reality he doesn't give. This difference between public perception and reality is called expectation gap. Now, this topic is tested through 2 things. First, a very simple question comes, state the limitations of audit. You write the limitations. Second question is a bit dumped up. Why auditor gives reasonable assurance? Why he doesn't give absolute assurance? Same answer. Auditor does not give absolute assurance due to these limitations. Write these 4 limitations. So if the question asks about limitations, write the limitations. If he asks why he doesn't give absolute assurance, why he gives reasonable assurance, still the answer is due to limitations. Copy this, please. Okay, now after doing everything that we now know that relation of agency and stewardship between shareholders, directors, shareholders don't trust directors, an audit is statutory, non-statutory. An auditor never gives absolute assurance or guarantee, gives reasonable assurance due to some limitations. I still haven't taught you what is audit. Now, this is our last thing of today's class. What exactly audit is? Now, an audit is basically when an auditor comes and does an independent examination of financial statements. Auditor comes and does an independent examination, just checking of financial statements, examination of financial statements. Remember, financial statements, P&L, balance sheet, statement of general equity, cash flow notes. And after the examination, he is able to express an opinion on two things. Number one, whether financial statements have been prepared in all material aspects in accordance with an applicable framework, whether financial statements are prepared according to framework standards. And number two, whether they give a true and fair. Now, let me come back to it after this. True means honest, can be verified by supporting documents. This is true. If everything can be verified by supporting document, then it's true. Like if sales can be verified by invoices, like wages can be verified by pay slips, like purchases can be verified by purchase orders. This is true. And fair, pure intentions. There were no nullified intentions, the intentions were pure. Like at year end, the management tries to build up too much closing stock so that when closing stocks increase, the profits increase. This can be verified by documents, but that's not good intentions. Or they hire worker and tell them, okay, we will show you wages of 100,000 so that our cost increases, profits reduces, and our tax goes down. So this is maybe true, can be verified by supporting documentation, but that's not fair. Intentions are not good. So what is audit? You will learn across the syllabus how to conduct audit, but it's just when an auditor comes and does an examination of financial statements, the 5 things. And after the examination, he doesn't say that, okay, financial statements are true and fair. He gives opinion on 2 things. This is also a problem. People say that auditor only gives opinion that financial statements are true and fair. No. Audit is an examination which enables the auditor to express an opinion on 2 things. Number 1, whether financial statements are prepared in accordance with a framework. The financial statements are prepared with accordance with a framework. Number 2, they give a true and fair. So you will see how auditor is able to give this opinion, but audit is basically an examination of financial statements which enables the auditor to express an opinion. After that, he's able to give an opinion on 2 things, that FS are prepared in accordance with the framework and they give a true and fair. Okay. Hope you enjoyed today's class, and we will end it today. And in the next class, we will continue this chapter. If you have any questions, please drop me a text. Thank you. Maybe in what class? याद है पहले जब आप क्लास शुरू करते थे वैसे हेलो हेलो करते रहता था, याद है? बहुत चीजें पकड़ने जाएंगे।